Hello everyone. Bitcoin is trading at $114,933. Today it went higher, above $116,300. And now it has pulled back almost $1,500 down. Before we start analyzing the chart, I want to remind you that there was an unclosed gap on the Chicago Mercantile Exchange. I already drew this in the previous take, but I'll draw it again. So, look, here's what I expected and what actually happened. I expected a repeat of this pattern with the closing of this gap. Look, first we had a partial closure, then a higher high, and then finally the full closure of this gap. And then with the movement further towards its closure, yes. Well, it closed and then the movement continued. So what happened here? Here it is, a partial closure, right? That is, we didn't close it right away, then we narrowed it partially, and then went lower. Here we went higher, but here we went lower. And yet this gap was closed. Following the logic of this gap, yes, we can expect higher highs, well, a continuation of the upward movement. But it's not all that straightforward. I'm just showing you that this magnet has already been covered, closed, and we won't be coming back to it anymore. As for other unclosed gaps, well, I don't remember any, at least not on the Chicago Mercantile Exchange chart. Now let's go back to the Quant Fury platform. What do we see here? Here we see daily candles, but let's actually start by looking at the monthly ones. And take note, the August candle set a new all-time high, but closed with a solid red or orange, as it appears here, body, which suggests further downward movement, likely into this area here. Here we had a kind of trading range from which a strong pullback started. That's $102,500. But the September candle has a chance to engulf the August candle, and in that case we would be talking about a continued upward movement, potentially with a new all-time high. But we can only say that for sure after the September candle closes. For now, it's just a hypothesis. We can't draw any concrete conclusions except that at the moment the situation remains short-oriented. And we're saying this based on the August candle, since we don't know how the September candle will close. Now let's look at the weekly candles. What's happening with the weekly candles? There's an interesting situation here as well. Look, the first time the high was updated, a red candle. The second time the high was updated, again a red candle. And then we started moving down. This huge green candle was engulfed. This indicates a bearish engulfing and a trend reversal to the downside. But at the same time, note that the current week risks engulfing the last falling candle from August 25th. And if that happens, we have every chance to return to this range and get stuck in a sideways movement again. That's around $119,500. Again, we need to wait for the week to end. That's it. Based on the weekly candles, we have the prerequisites for growth towards the 119,000 area. But if the week closes below the base of this red candle here, and its base is $113,493, then it's all over. Most likely we'll head down. So now let's look at the daily candles. The situation on the daily candles is also ambiguous. We broke through the 5-day, tested it, broke through the 100-day, tested it. Now we've broken through both the 100-day and the 5-day in the opposite direction. And with high probability, we'll see a reversal at least back to the 5-day. Just to confuse us there, some will decide to open a long position, others will decide to open a short position. And it must be said that both sides will be right. But you need to watch the situation as it unfolds. If we're talking about right here and now, I would say that the priority is downward toward the level of $114,500, where our 5-day moving average is. And if we close below that, there's a high chance we'll head toward the 100-day around 112,500. If after this retest, we end up closing with a green candle, then we have a good chance of continuing the upward movement. And the target level would be this untested reversal point, which is roughly $116,900. So at the moment, a pullback to the area of the 5-day moving average seems likely, and then we'll need to look at the smaller time frames, how the daily candle closes, how the 4-hour candles close, and so on. But right here is where the decision point will be, in my opinion. Let's take a quick look at the 4-hour chart. Yes, and our RSI is currently above 50. Most likely at the moment, it points toward continued growth. So let's look at the 4-hour candles, and on that note, we'll probably wrap up. 4-hour candles, what do they tell us? They show that all the moving averages have been broken to the upside, which supports the case for continued growth. At the same time, the RSI is already in a rather overheated state and also suggests a move somewhere to the area of $113,800, $114,000, in order to test the 200 period moving average. In this particular trading zone, I would definitely consider going long if, after thoroughly testing it, we clearly see a strong green candle that completely engulfs the preceding red one, indicating a significant shift. And I would consider going short if two consecutive red candles close below the 200 period moving average on the 4-hour chart, or if two red candles close below the 5-day moving average on the daily candles, respectively. Subscribe and leave your comments. See you next time.